So I'm going to tell you about the week and why I did everything that I did. And I'll just start and I'll start rattling it off, right? I got up Monday, right? Actually, I was 8 long, 6 short when I started. So I actually, I can't tell you why. It was pretty bullish, but it's been so volatile with everything. I've just been residual caution, right? And even then, we got absolutely hammered like everyone did when it's open. And as I alluded to earlier, my one mistake, I checked everything when I got up and it was like red, but things were going up. Like things like, I remember when I got up, things like Palantir and App11 were down like 5-6%. And I saw them creeping up to about down 3%. So I was like, well, I don't want to overreact and start shorting things, right? That is my one big regret of the week. I should have started shorting Micron, Dell, these things that I was shorting later in the day. Their option sentiment were starting to change. It didn't react that fast, but with the turn, I was wanting to see more data. As that happened, right, I was loading up on a lot of shorts and also trimming my longs, but adding some longs that I had conviction in, like Bitcoin was more resilient. So I kind of kept my Coinbase position, looking for, other names, but mainly just keeping what I had to see if it would recover a little more. The names I liked more, like Meta and Tesla, and App11 and Coinbase, and getting out of everything else, that especially ones that had lower net option sentiment. As the week went on, I was really, really focused on finding opportunities, right? And one of the things that, even my paid subscribers, I sent this alert at 9:29 when Xerox was down a little, and at open they went down a lot. So sorry, I would love to get those to you sooner. But basically, when these things happen, right, I look for opportunities that fit with the theme, right? What was the theme? The market was worried, right? I saw Xerox report not great earnings. I didn't know why the response wasn't. And I was kind of like, that was my delay. I was like looking at it. I was like, why isn't Xerox getting hammered more than this, with the way the market is? And one of my best moves of the week, got in there right before open, went down, because that was just a logic thing right there, where it was just like, the market's really nervous. These aren't great earnings. Xerox is always bad in our signals. That was a really nice opportunity. And even people that, fancy themselves investors, long-term, whatever, you're never going to be your best version of yourself if you can't locate opportunities like that to protect your downside. Everything after that, I was just scaling more into names I had conviction, right? Uncertainty. I was short, I think, as much 3x Dell at one point, and I was long as much like 6x Coinbase at one point. That is what I always lean on. When I don't really know what's going on or where it's going to go next, I lean on what I know. And I knew Dell was at the bottom of momentum score. Coinbase was still looking good, kept 100 net option sentiment. So that was my strategy. Now we get to today, when things were, starting to be even crazier. I was a little nervous heading into the meeting, right? I had exited some of my positions, some of my conviction positions, right? Like Dell and Coin, I had reduced to lesser positions. Why? Because I was taking gains as things cleared up a little bit more in terms of the direction and the volatility in my mind. I was taking those gains because I didn't want to be over concentrated on Dell swinging back, right? Or Bitcoin going down. I then wanted to de-risk and spread it out, which is when I started to add more short names. When I got into SPSC, STX, I was looking for diversity in my shorts to protect against. I was a little worried about the Fed, right? Then when the Fed happened, it looked bad initially, and I increased more diversity, more shorts, just to make sure I was covering, more sectors, more market caps. Then, kind of back to Monday, when it flipped back the other way, I was just like, oh shit, this market can't really decide what it's doing at all. So that's when I got into Block and Coin again, because I was like, I have conviction on that. Actually, for the first time, I realized we have to update block in our app because it had a ticker change. But for the first time, I actually am acting on a tip that I trust in terms of someone that's really increasing their position because they have conviction. So that's why I did block. I'm taking my conviction from someone else, which I can't really talk more about why, but I validated it as I always recommend. I validated the thesis. So that's why I got in, right? So you're seeing me yo-yo, and that's why I wanted to say the whole thing. You know, I'm always trying to be opportunistic, but there's times when there's just so much volatility that I have to just concentrate in what I'm most confident in only. And then there's times when, you know, I've seen that work and I've gotten some profits, and then I take those profits and spread out more again into more sectors, more market caps, you know. And why? Because in times of volatility, the most important thing is to take your gains. Take your gains before they become losses. I know that's uncomfortable for some and their strategy, but that's why I didn't lose conviction in Coinbase or Dell or whatever. I'm just taking my gains when I had them, just in case there's a big swing. And then I'm happy to enter again when I'm seeing, you know, more volatility, craziness ensue. And I just wanted to explain that because I've been making a lot of moves, and I wanted to give people the context of why and what the rationale is behind that.